So yesterday we just went over how to um how to edit a okay, never mind. I don't know why. It says how to edit a memorized transaction. We didn't really do that, but we did enter in this Sinclair billing, so we were able to memorize the report. If you guys remember, we entered in the data, and because this is a reoccurring bill that you're frequently going to get, and you want to memorize it having to instead of constantly having to try and uh, receive this bill all the time and entering the same thing, what's going to happen is once you clicked memorize report, every time you type in Sinclair insurance, everything should pull out. All of the information should pull out. So let's go ahead and test that right now. So here I've already loaded up the program. This is from last time. So here I see Sinclair, and it's right now. This is exactly what's going to happen. And here's the amount number. So for $600. So if I were to just close this out regularly, and I just say enter a bill, and my new window pops up, I'm going to go ahead and write Sinclair insurance. Everything has popped up, including, guess what? My memorized bill popped up. I didn't have to enter anything in because I've already selected to memorize this report. So here it gives me my insurance account in there. It also gives me my amount. All that's different is going to be my PO and how much I'm going to pay for and the date. So all of this right here is different right here, but everything that we just entered in stayed the same. Okay, so this is what a memorized bill. You could do this for a bill. You could do this for an invoice. You could do it up to everything except I believe you can't do received payments, you can't do paychecks, and you can't do, I think you can't do a couple more. Let me see what your book says. Okay, well, it was here in that box. But yeah, there's a few things that you can't really memorize. Yeah, so, okay, it's going to be here. You can only memorize the reports, but there are some things that you can't memorize, such as paychecks. Oh, wait, that's a did you know. You can't memorize paychecks. You can't memorize paychecks or receive payments. You can't memorize those. Okay, because again, it's kind of straightforward, common sense. You can't expect someone to give you a certain amount of money every single month. And then same thing with paychecks. You can't expect that every single paycheck is going to be the same. The only one that you would be able to expect if it's a salary person. But then again, you can memorize like their hours, but you can't memorize the paycheck itself, okay? Because the paycheck amount can change at any given time, and you're able to change it at any given time. And most paychecks, right? It's pretty straightforward. Not everything's going to be the same. It could be a cent different. So especially for someone who's working an hourly rate, they might have clocked in only 3.5 hours, right? Or they might have clocked in for extra over hours, which that means you have to multiply it by 1.5 more. So every week, every day is going to be every paycheck is going to be different. So make sure that you understand that. Okay, so that's the last thing that we've touched upon so far. A few things that we were deleting and rescheduling and editing memorized transactions. So it's pretty straightforward. You'd be able to, so you would have to go to your memorized reports, which is going to be memorize transaction list. So let's go to list. And let's see. memorized transactions. So once you open that, you're gonna have to find, so I only have one bill, which is right here, monthly insurance, right? If how I'm just gonna go ahead and double click it, and it's going to populate this, and it's gonna give me this window, and I'm gonna go ahead and just continue editing. So for example, let's say my insurance dropped, oh no, it increased to 800 this month. All right. And so I made that change, and I'm going to go ahead and click save. And then so next time I change, or next time I enter in Sinclair, it's going to populate it's going to populate with, okay, never mind. It's still 600. So I'm going to change it again. Oopsies. Not divide. I'm going to change it again to 800.
It saved it to the right, Lynn. And then the 600 is in red. Does that mean it wasn't paid?
Yeah. Hold on. Let me clear out my information here before I. Okay. You said it saved it to the right?
Yeah, to the right of where you're working. There's a column on the right side there.
Oh, okay. I see what you see. Yeah. Okay. So let me see. Let me test it though, because so let me test it. So let me go ahead and go to pay bills, or enter a bill, and let's see, Sinclair, and no, it still recognized my account, but my number is not there. So I would have to fix it again under the memorized transactions list, and
There it is. It was loading.
loading.
Yeah, it was loading. See on the right? It hadn't populated yet. It was loading.
Okay, I see. Okay, so yeah, so here okay then. Good. So here our memorized reports are going to be for this amount. Oopsies, I hit the report by accident. So yes, on the right side here you have another dated transaction for the June 30th, and it says here for 800. Okay. So other than that, that is how you would just edit it. No, I'm not going to save that transaction. Again, you'd be able to, you can go to manage, memorized transactions. You could either do a new one. You could either print this list. You can either edit the information, or you could delete it right here. Okay? It's pretty straightforward. Everything it's yes. So again, editing the information is pretty easy as far as doing it in QuickBooks. Some depending on which platform you're on, whether it's the home page or whether you're using something like this, you may be able to right click it and be able to delete it, or you might be able to double click it and be able to edit the information there. Yes, so again, QuickBooks is actually very user friendly. It doesn't stop you from doing a lot of things. The only person that's actually stopping you is the accountant and the rules of GAAP. So again, this is on your end. So memorizing a transaction, it's based on your end. So you can delete this anytime you want. It doesn't affect your transactions at all, because this is you saying, all right, I got another bill coming up. I don't want to have to type it in again. So by just memorizing the report, I just type in the name and it will populate the same exact bill for me. So in other words, it'll fill in the information for you and basically become a shortcut. So so it makes it just, if the way it functions is a lot more easier, so that you don't have to type in the same information again and again and again. So we just saw editing memorized reports. So again, that's how you would do it. Okay. And then let's see, deleting, pretty straightforward. You can right click and delete. You can go to manage transaction. Excuse me. You could go to manage transactions and delete. And it's just going to ask you, are you sure you want to delete it? So again, this section here is going to, it's pretty easy. Okay. All right. So the next section that we have here is to close the year. Okay. There are a few things that you need to do before even closing the end of the year. Okay. So what does it mean to close the end of the year? So this is basically where we compile our equity statement. We do our financial statements, and what we do with that is it's going to automatically transfer all the information. So it's going to either determine your earnings and also determine whether you made a profit or a loss. Okay, so once you've determined that, what's going to happen is it's going to automatically update your equity to that amount. And when you do that, that's when it's going to, what you're doing when you're basically closing out the book is you're going to zero out all of your temporary accounts, which is your expenses and your income, and you're going to close them all out to equity. All right, so you have a few choices there as well too, whether you want to either reinvest into your company, or you can actually pull that money out and pocket it. All right, this is your profit, this is your earnings, right? So that's basically what it is. It's just depending on what you set the accounting period to be, or I'm sorry, not the accounting period. It's what you what you want to set the accounting period to be. So what the accounting period is when you schedule to complete the entire accounting cycle, which closing the books is the last step in the accounting cycle. Okay. The first one is to understand the transaction. Okay. And we're going to make it all the way down till we have to close our books at the end of whatever the period is. Okay. So it could be daily, it could be weekly, it could be monthly. Now, for example, if you're a small business, keeping track of your business transactions, you don't have to do it every single day, or you don't have to do it every single week even. You could do it as much as you want. Most common small mom and pop shops usually wait till the end of the month to do it. But if you're like a major corporation like Walmart, and you're doing millions and millions of transactions a day, that would be best to do the accounting cycle every single day, because you want to make sure that you're doing accounting correctly. And this is exactly why major corporations would pay the big bucks to the big accounting firms, because they have to sit there and go through trillions and gazillions of transactions every single day just to produce the financial statements for the viewers. And then again, determining the profits, whether they're going to disperse them or not. So it really depends on your company, but in this case, it doesn't, you don't know what it is. It's whatever you guys determine it as is. Like, are you going to close your books out every month, every week, whatever it is, every quarterly? You guys, the accountant gets to determine and gets to choose that what works best for your company. So again, what it does is you're going to convert. You're going to find your profit and loss, which is taking all of your income, and you're going to subtract or less all of your expenses, and you're going to determine whether you made a profit or a loss. And then with that, then it becomes it becomes retained earnings. In this case, we're looking at a corporation standpoint in this one, because we would never see retained earnings or common stock as part of equity, because we're only focusing on private. So this is just an example of what happens and how when you close out your book, this is that the equity should increase or decrease based on whether you made a profit or not. Okay. And then, so closing the accounting period, there are these, I think there should be 10 steps. Yes, there are these 10 steps that you need to do in order to close out your books. So I'm not going to go through all 10 steps with you guys just because it's very long. But it's pretty straightforward as, doing your year end entries, your adjustment entries. So that's always going to be number one. So the first one is going to be, enter depreciation entries, right? Depreciation always happens either at the end of the period, end of the year, whatever you determine it to be. So if you own fixed assets, you must depreciate. Okay? Other than that, you need to reconcile either your cash, your bank, all your credit cards, whatever it is. So it's pretty straightforward, each single step. And then I'm going to go ahead and skip to step 10. Step 10 is going to be consider using the clean up data file under utility. And this will pretty much condense your information, okay, or reduce it. Now, again, there's two of them. So what this does is when you're cleaning up or you're condensing your data, what's going to happen is it's going to clear out all of your expenses, clear out all of your income accounts, and all you're going to be left with is going to be your centers are going to stay put and your registers are going to stay put. Okay? But all the transactions that you've done is going to be gone. So everything that you're going to have. So basically what you're going to do is you're going to start the new period, right, with brand new transactions that are dealing with anything that has to deal with either income or expenses. But for example, all of your registers will stay the same. So the people who owe you money, they're still going to owe you that money. Okay, so that's what the cleanup does. Or the condense data. So you go to file and you go to utilities and you're going to click condense data. That's the one where it's going to shrink your data. It's going to shrink your data, get rid of all the expenses and income accounts, and it's going to clean out give you a nice clean slate when you do condensed data. Now, if you were to press it, it's going to ask you, well, where do you want to save the information? And then that's where you can choose to where to save it because, again, if you ever want to open up a backup file and you want all your information there, maybe you need to make an adjustment. So you'd be able to toggle it through. You'd be able to pull up a backup file using the backup file. So, yeah, and recording closing entries for sole proprietors. So this is one that's meant for sole proprietors. So again, instead of looking at your common stock and your retained earnings, you're only going to be focusing on your net income and any withdrawal, any owner's withdrawal from your company. That would be pretty much it. So here we're recognizing that we have the owner's draw and the owner's equity. Okay, so again, you're going to close them out to each other. Okay, so you would have to create a journal entry to close those accounts out. So anything that affects these accounts will be closed out accordingly. Okay, and then you're going to, if you have partners, okay, then this would be, yes, how you split their earnings or whatever you want to call it, or however much they invest in the company is that amount. So yeah, so so this book shows you pretty much how to be able to close out a book, whether it's a corporation, sole proprietor, or partnership. Now in this case, I'm going to go ahead and skip forward to these just because let me see. It's pretty much the same thing. You're going to create another journal entry to close out the owner's equity to the owner's withdrawal. So let's go ahead and practice that right now. So again, make sure you go over the 10 steps of how to close your how to close out your accounts. Let me see. I don't know if I even let me go ahead and let's go ahead and explore this real quick. So let's go here under chart of chart of accounts. Okay, so here we recognize that we have let me see, where is equity? Equity. Here we have capital stock. So this is, oh, okay, so I guess this person's a corporation. And they have distributions and opening ball equity. I have no idea what the heck that is. And retained earnings. So this one's doing a corporate standpoint. Now again, when you build your own company and you do your equity, what you're going to do is you're just going to do a journal entry. So going up to company, make a journal entry, and you're going to just, close out anything to equity. So in this case, we don't need to do it just because we're not a sole proprietor. However, I still want to be able to show you how to do other journal entries. Okay, so again, the purpose of using journal entries is to make your end of the year adjustments. So example, it supplies expense, right? Maybe you didn't use them all. Adjusting your inventory is one of them. Depreciation expense, right? If you own a fixed asset, right, you need to depreciate it. Okay. And yeah, we can go ahead and skip that since we're not able to do it. So distributing income to partners. Okay. This one is a little straightforward as well. Just make sure to read the book if you plan on doing a partnership. What you're going to do is, you're just going to split between each partner's equity. And you're just going to just divide them. So same thing, you're going to just create another journal entry for that. Okay? And setting the closing date. Okay, so this is very important when you set the closing date, because when you set the closing date, it's going to lock up all of your work in your QuickBooks, and it's not going to allow you to have access to it unless you are the administrator. Okay, so again, what this closing date does is it locks the file so you can never have access to it again. So, for example, for accounting purposes, again, you never want to manipulate, um, delete, or adjust any information once the period is over, okay? And this is where fraud comes into play, because if you have access to edit all the information to make your books look good, like for example, I put a whole bunch of sales making my books look good, right? I record all this thing and I have all this income, right? And I'm making myself look way more profitable than I really am. And I try to get an investor to invest in me, and I end up just taking their money. So again, fraud can happen, and this is exactly why we need to close out and use a closing date. And what QuickBooks does is it only allows the administrator to make those minor adjustments or changes. Okay, so to close out the date, okay, or to set a closing date, it is going to be, you can either do it in preferences, and set the date there, or you could go to company and close and set the closing date there as well. So if we go to company, you should be able to set a closing date. Set up users, customers, set closing date is right here. You can also again, if you read the book, it says that you could go to edit preferences and close the date out there. But if you guys remember, if you guys set the closing date right away, you will lock your access to QuickBooks. Okay? So always save the closing date until the end of the period. Okay? Wait till you've completed every single transaction, everything looks good. Make sure that you do your financial statements until you are ready to completely lock your file. Then go ahead and set the closing date. Okay? Typically, if you are doing a calendar year, you would set your closing date to be December 31st of that year. Okay? But if you're going to go for fiscal year, that is also going to be, you're going to set your date to be the last day of your accounting period, which is, it's going to be the last day of your 12th month. So again, usually in this one, it's based on an annual basis. But again, if you're planning to close your books, or your accounting period is every week, then you should close your books every week. Okay, so again, depending on what kind of company you are, if you're a bigger company, you should generally do these books often. If you're a smaller company, you'd be able to be a little more lenient and do it later on, because your transactions are not as it's not high volume. Okay, so again, never set the closing date until you are completely done with the file. Let's see. Okay. And I guess that's it for chapter 13. Everything else just shows you how to close it out. I don't want to close it out. I don't want to lock up my file. So go ahead and just read this. Follow through the instructions on how to close out your accounting period, or your books. Again, I don't want to lock up mine. So again, you need to create a password and whatnot to lock it up. And that is pretty straightforward as far as how to just close up your books. Okay, so let's go ahead and go over the review questions. Okay, Number one. Anybody? It's a long one. Okay. Well, which of the following tasks does QuickBooks perform automatically at year end? Hello? Did I lose you guys? Okay.
No.
Okay, so we
Adjust the balance in the retaining earnings.
adjust the balance in the retained earnings account to reflect the net income or loss for the year. Okay, that's okay. Okay, that's an okay answer.
That's an okay answer. That's not the right one.
Let me see. Okay, hold on. Let me see. Oh yeah. No. You're right. You're right. I'm sorry. I thought it was. I was just like. Okay. Yes, it is. It is C. You're correct. Because let's go through all the answers then. So A says to create adjusting journal entries to the income and expense accounts. Again, you actually have to manually do that. Anything that has to do with journal entries, you have to manually do that. Okay. Second one is identify the expenses that are too high in comparison with prior years. You would have to run a report for that. So again, it's not automatic; it's manual. And then C is correct. D, you have to set that up. You have to manually set that up in order to back up your company file automatically. So yes, C is correct. Okay. Number 2, entering data in a closing date field accomplishes when accomplishes which of the following. Okay, what does it do? Okay.
It looks like A. Determine which date QuickBooks will use to automatically close the year.
Okay. Determines which dates QuickBooks closes your file. Okay, so this was like 1 second ago. I remember when I said you never ever choose your closing date because what does it do?
Oh, because it will close it, and you want to be able to close your own.
Yes. So who? Okay. It locks the data. That's correct. Because who has access to it? The admin only has access to it. So it locks up the data so you can't manipulate it.
So DC.
It is C, yes. Okay. A is a potential, but it's actually, I guess it's not complete. Because it does accomplish that, but the primarily reason why we close up our books is to lock our data. Number 3, okay, voiding and deleting transactions both do the following. What does it do? and is specified by transaction. Okay, good. That is, yeah, that's correct. Let's look at A. Keep a record of the date, number, and default. No, it doesn't. It doesn't do that. Completely removes all details of the transaction. No, it does not do that. For sure, it does not do that. Because again, if you void a check, what's going to happen? You're going to have a hole in your gap, right? You're going to see a check that's out there and it doesn't do anything. And if you delete it, then you're going to have that missing information. So yeah. So good. All right, number 4. To make an adjustment to an item as well as their associated accounts, create a what? Okay, what was this? What was this? What was the purpose of this entire chapter? What was the big majority chunk of this chapter? How do we do adjustments?
We have to zero out our balance.
Yes, but how do we do that?
$0 check.
Trail balance.
Okay, no. Actually, wait. Number 4. Number 4. Yes, you would zero out. Yes, you would. How would you do that? You would write $0 checks is correct. Yes. Yes. Okay. So again, to make an adjustment to items, okay, as well as their associated accounts, create a yes. So again, when you use a general journal, okay, so the answer could be conflicted between A or C. Okay, so a general journal, you're not creating anything. You're just moving you're just moving account. I'm sorry. You're just moving an amount from one to another account. Where $0 checks allows you to essentially do the same things as a general journal, except you're actually going to create and change the items. Okay, so if you guys remember, I wrote a check for, instead of retouching, they wanted an actual photo shoot. So with that example, I wrote a $0 check. So I think this question is kind of vague because essentially you can actually do the same thing as well. But in this case, C is the correct answer. Okay.
That was kind of confusing to me.
Yeah. It's definitely not a fixed asset and it's definitely not a memorized transaction. But C and A seem to be the possible answers. I would have chose A, but it's actually C because they essentially do the same thing because in order to write a $0 check, what account do you need to be using?
But we're zeroing it out, right?
Yes, that's correct.
Yeah, it's confusing about the check part. So we're actually writing a $0 check? Is that right?
It's because you're not adjusting anything but the items.
Uh-huh.
If you go to page 397,
Uh-huh.
it actually talks right there about how the journal entry doesn't work for this because there's
Okay.
no provision for entering items.
Exactly.
That's
Yeah.
why the journal entry doesn't work for this because it's literally just your items.
Exactly.
You're not changing a dollar amount or anything.
Exactly. What you're doing for the journal is you're like again, you're transferring from one account to another. That's all you're doing.
Oh, okay.
Where the $0 check,
Yes, check.
okay, but $0 check isn't. You're not writing a. It's not. It's not. What do you call it? It's not literal.
Check.
It's not literal.
Okay.
So what you're doing is you're writing a check for the same amount but with a negative number. That is what a $0 check is.
Okay. Yeah, I
Okay.
see where you would say that it looks like A also, just looking at this, on 397.
Yeah, so that's why I'm saying like I like again, Julie just explained it that why you can't use a journal entry for it, but again, if I don't remember anything, if I were to just look at my answers, I'm already split down to either A or C. Now, I probably would have wrote A at this point because I would have been like, well, we're making adjustments. But the reason why you wouldn't be able to do it because again, journal entries, what you're essentially doing is you're just taking money from one account and transferring it to another. That's it. You're not you're not changing an item, you're not itemizing anything. Whereas the $0 check, you are. Okay? But you still have to use the general journal entries account, but instead of just transferring money from one account to another, this one is you're actually using the actual item. So again, the general journal is for accounts only, whereas the $0 check is primarily for items only. Okay, so thank you, Julie, for looking that up. But then again, see, just doing process of elimination, you're either down to A or C. Okay. And then lastly, number 5, at the end of the year, you should perform which of the following? Perform the following.
B.
D, yes, D, all of the above is correct. So yes, you again look at that 10 steps to close out your accounting period or before closing out your accounting period. And the very first one is to make sure that you depreciate your assets or to do your depreciation entries. So that's number 1. Perform a physical inventory account. So again, adjust your inventory. And then if your business is a partnership, divide or enter, and all your profits. Yes. So yes, you need to do all of the above. That's correct. Okay, so that is the end of chapter 13. Again, it's pretty straightforward when you're doing adjustment entries. Again, just use the general journal. But if you're actually using an item, then you would have to use the $0 checks, the $0 checks. But in this case, most of your transactions will most likely either be a general journal entry, so whether it's zeroing out or transferring from an equity account to another equity account, or closing out your equity or your income to your equity. So again, it's just depending on what accounts that you're looking at or what kind of items you're looking at will determine what you need to do. So again, for the sake of this one, just make sure that you study those 10, let me find it again, where the page is. So again, here on page 407 to 408 is going to sum up what you need to do in order to close out your books. And then lastly, when you're completely done with all your transactions, that's when you can choose the closing date. So it locks the file and that's it. You're done completely. Okay. All right, so right now it is